Good morning, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern on Wednesday, the 18th of January, 2017. Thanks for joining me again on another Trader Bite. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. As far as what's on deck for today, news and such, um, the key thing to note is that the market is slightly bullish today. It's mostly mixed globally, but in the U.S., the leaders are mostly indices, and the laggards are the biggest laggard is energy. Um, Trading. By the way, energy has rolled to March 2017. In case you have not, you're trading crude, and you have not rolled. We're no longer trading February. We're trading March. So you'll see a gap in your chart. It's trading at 52.12. Energy's down $2, 2.15% from yesterday's close. The dollar's leading the pack, trading at 100.825, up 50 basis points. And then as far as the news is concerned, the home prices in China did not rise as much in December as they did in November. Get this, prices in Beijing and Shanghai gained 26.5 and 23.5% respectively in 2016. Yikes, that is a lot. Euro inflation was strong, and the reason I'm mentioning this, and this is important, Euro consumer prices rose 1.1% in December, up from 0.6% experienced in November. Energy being plus 2.6%, seeing the fastest appreciation here. Tomorrow is the ECB announcement. We get the ECB rates plus the 7:30 Central, 8:30 Eastern press conference with ECB President Draghi. So this is going to be taken into account, and I'm sure is likely to be discussed during that announcement. Unemployment keeps falling in the UK, and then we got earnings this morning from some key banks. We got Citigroup announcing $1.14 versus $1.11, 17 billion in revenue, meeting estimates. And then Goldman Sachs announced today came in at 5.08, $5.08 versus $4.76. Revenue is 8.17 billion versus 7.43 billion. I read somewhere that Goldman Sachs has now got about $1 trillion under supervision, or under, not under management, but under supervision, or on their books. That's a lot. That's a very, very high concentration of capital. Other than that, looking ahead at what we've got for today, we have cap utilization coming up here in 10 minutes, industrial production, and we also got we had CPI about 34 minutes ago. We got CPI in the U.S., which came out at, what did the CPI do? Came out in line in both. The headline number came out at 0.3%, and ex-food and energy came out 0.2%, both in line. Nothing exciting there. We're looking for NAHB housing market index at 10 o'clock Eastern, expecting 69. And we are getting a couple of Fed speakers, including Yellen. But this morning, Fed Speaker Kaplan started speaking a few minutes ago. We get Fed Speaker Kashkari at 11, and then we get Fed Chairman Yellen at 3 o'clock. At 3 o'clock this afternoon Eastern, she speaks in San Francisco. That's what's on deck. Let's look at what happened yesterday. One second. Yesterday, the expectation was for a market to revert back up towards 2270. The primary hypothesis was for the market to open in an open auction. We are up against the 65, 2265 even MC point of control, and the was looking. I was looking for some turbulence there. Was looking for opportunities for it to test the OS low, the opening swing low, once the market opens. I'm looking for an opportunity to get long for a push towards the prior day's range, and then to start to a small pullback and then to start to push towards 2270. That did not happen, but that was the key plan yesterday. The secondary hypothesis is a test of the prior day's low, poke through, and then fail to hold, and then rotate down to 2257.50 area. That's basically what happened yesterday. We're looking at this is exactly what we got. We opened, we pushed up to 67 and a quarter, and then we failed to hold yesterday's range right here. And then once it could not push into the prior day's range, you see here there's an impulsive move down. This is all this volume that was here that's trapped. So if you look at this setup here, there's a fair amount of volume that traded right up here in anticipation of a push higher. Once it started to fail, it had an impulsive move. We had a small pullback. It couldn't quite pull back to the mid, which is right there with the open. And then we had the continuation move down to 57 and a quarter. So we took out the prior day's low by a tick. So this is hypo 2 almost on the nose. We finished the day moving back up to mid and then leaving the point of control below us. Yesterday's profile is just an odd shaped profile. The market clearly yesterday was battling in several places, had no consensus. It ended up holding on to staying below the prior day's range. However, I wasn't in on this idea that we were likely to rotate down. What we had yesterday is typical of an MC point of control trade. So if you look at this bigger time frame chart, the MC point of control, for anybody that doesn't know, is this black line. It is the most traded price inside of this box, and this box is what's called a micro composite, and this is a combination. What I'm doing here is I'm combining or grouping the volume for multiple days that makes sense. In other words, I'm starting this on December 7th. That's when we popped up, and we've been sideways basically since then. So I'm plotting out what is the volume inside of this at every price. And then when we look at that, we see that 65 is the most traded volume. And the market's just been trading around it. So if you look at this price here, it was 64.50 and went up to 65. You can see the points of control just kind of shifting up and down, and around it. This is tracking the points of control. And what we're doing is we're bouncing up, we're testing higher, failing, so we're running out of buyers, and then sellers step in, we test lower, and then we run out of sellers because it is imbalanced, and then we have buyers stepping in, pushing it back in range. So yesterday was mostly spent in that 65 area. This is the way we trade balance, and it's definitely not a fun trade for someone who's looking for a trend. It's great for short-term traders. Overall, the market's still forming another triangle. If you're into patterns, and we're right at the MC point of control, we're looking for a break from here. This morning, we're more likely to rotate higher than lower. If we look at the overnight trade, overnight inventory is positive. We're trading above the 2262.50 close yesterday. 2262.50 is the last traded price on the pit session. We have a small double top on the overnight session. We're holding above the mid. We're holding right at the point of control, and we have pushed above the prior day's range into Friday's range right over here. So we've basically dropped yesterday in the overnight. We've dropped the point of control lower. Now we're moving up and we're likely to continue to shift up. So I'm looking for 2270.25 to be tested at some point today. Okay, so the overnight session is mostly balanced. It's got multiple prongs, but mostly balanced, and it's holding the upper range of yesterday's trading. The low of the overnight session is the point of control of yesterday. It found buyers down here and has not looked back. And unless that gets taken out, we're likely to continue higher. That's the easier path. And we see that on the quote board. I'm seeing that most of the risk assets are positive, and most of the safety assets are negative. Money flow is into risk today, unless something changes, unless a Fed speaker or whatever says something. We're likely to push higher. So my primary hypothesis for today, as you're already guessing, I guess, my primary hypothesis for today is for the overnight inventory to balance almost immediately or very quickly by pushing down. And then I'm looking for a base, and I'm looking for the market to push to 2270 quickly, pull back, push higher towards 2272, and then fail, and then hold steady into the close inside of Friday's range. That is the primary hypothesis. Okay, so upwards. Now, the more interesting trade would be to open, push higher, push into the overnight high, which is very, very likely, and again be confronted by sellers and then move back to 65, chop around, test to 61, and end up at 65 again, as we don't have the engine or the uh, power, the motion right now to break away from this area. But we are consolidating for a break, so there's no question about that. But the second hypothesis is a push higher that fails back into the prior day's range. So if we push up and we turn around and come back into the prior day's range, remember the prior day's range is right here, 66.50 down to 57 and a quarter. We push into the prior day's range, then I'm looking for this 61. I'm essentially looking for opportunities to get short, and I'm looking to push or campaign towards 61 even, and that'll be the main trade on hypothesis 2. That's all I have for you for today. There's a Don't forget, next Tuesday there's going to be an order flow webinar redoing the one from December. I'll notify you about that. If you're part of the mailing list, you will get notice. If you're not, look in the description of the video you're watching here on YouTube, and there's a link there to join the list. There's no spam. Most everything that's sent here is relevant to trading and only trading. Good luck and have fun today. Take care.